zone. There has been rejection in the $50, $45 range. We're yet to see anything coming in so far. That is a long scale chart, so it does look a little closer to 50 than it is on a bigger time frame. But that is a key move.
I don't know if a failure to deliver pushes silver, blows it through $50, or whether I don't want to say normal move, but a non-tumultuous move through 50, we get a close over 50, and then you get the sharks coming in and create the failure to deliver. But one way or the other, $50, I mean, it's obviously an important number. 1980, 2011, here we are again. And the only question in my mind is whether the failure to deliver creates above $50 silver, or does above $50 silver create the failure to deliver.
The global monetary system is quietly being reshaped, and gold and silver are moving back to the center of that transformation. Bill Holter warns that the silver market has entered uncharted territory, with delivery demands soaring and inventories rapidly draining, creating the visible risk of a failure to deliver. He ties this stress directly to the fading dominance of the US dollar, arguing that King Dollar is nearing its end. Gold, he explains, is moving back into the system rather than being suppressed outside of it, and when measured against US debt, projections of $107,000 per ounce are not only reasonable but conservative. He also points out that the repeated paper-driven smash-downs of gold and silver seen in the 2000s and 2010s have given way to a steady, more resilient climb in precious metals since 2001, accelerated by key geopolitical events such as the confiscation of Russian reserves. Francis Hunt adds that this monetary reset is not being driven by sudden shocks but by a calm, deliberate strategy from non-Western nations. China, Russia, India, and much of the global south are steadily accumulating gold while reducing exposure to fiat-based assets, building resilience without inviting direct conflict. Hunt highlights the organized development of a gold-backed trading network across hubs in the Middle East, Switzerland, Singapore, and India, designed to be transparent, audited, and credible. He also reflects on how gold was deliberately suppressed during the peak of financialization but has since re-emerged as the anchor of value in a world moving beyond dollar hegemony. If you found this video helpful, don't forget to like, share, and subscribe to stay updated. We'll continue delivering sharp insights and expert perspectives on the forces driving gold, silver, and the broader financial landscape. Thanks for watching.
Yeah, I think the story in silver is that the sharks are finally smelling blood in the water. And when I say blood in the water, I've been one who's talked about failure to deliver for a long time. And it really looks like what has really changed over the last 6 months to a year in the silver market, and also gold, but primarily in silver, is that if you look at COMEX, you look at the first notice day, first delivery day, the amount that are standing. In the past, it used to be, and let's just use a number of 100. 100 contracts would be standing, and by the end of the month, maybe 15 or 20 were still standing. Now, you start the month with 100, and you may end the month with 200, 250 or more. In other words, there are buyers that are buying in the delivery month with the specific idea of taking delivery. And that is draining, it has been draining inventory. I mean, you can just see the deliveries have been on a massive scale. And I think, enough people are seeing that to understand that the potential of a failure to deliver is very real, very clear, and right in front of us.
That's a great opening statement. I find it feels a little bit from my side like China, Russia, and the rest of the global south, whoever you want to include in that, the non-Western nations, have very calmly and slowly said, we're going sound money, and that means we see you can have your fiat and debt instrument back, and we're definitely going to be net accumulators here. And without doing it violently, there hasn't been one wow. It's anaconda-like. It's the slow, steady ease. It's not a punch and strike. It's an anaconda death that seems to be creeping up. How do you see?
Yeah, no, that's exactly correct. I mean, if Russia or China or any nation stepped in and created a failure to deliver with a series of big trades, that would be a declaration of war.
Aggressive, yes.
Right. And they don't want a declaration of war. Francis, I mean, there's people out there way smarter than you and me that are Chinese, that are Russian, that are Indian, that, I mean, these people know where this game goes. They understand that and central banks across the world, as evidenced by offloading treasuries and unloading gold, they know that when all is said and done, there's going to be a black hole in their balance sheet that was once filled with King Dollar. Now, King Dollar, uh, they understand they got to get out of the way. So, and let me also say, they do understand fully that the dollar is the Achilles heel of the United States and of the entire Western financial system.
Yeah. Yeah, I was talking to Eric Young, and he was highlighting the development. I'd seen it, but we addressed this very specifically with him. The calm and organized vaulting network that is being established for gold outside of China. So, they're looking at a central place in the Middle East. They're looking at Switzerland.
Right.
They're looking at Singapore. They're looking at India. They're looking at a bunch of places. And this is saying we're going to do gold backed trade and we'll keep an inventory. And these will be regularly audited and far more transparent. And we'll actually we'll cross the itemization of who owns what with each trade. So you're talking
Right.
about, you got the record deficits with the US to Europe and China. This is a totally open development of a parallel system, which is gold backed. Tell us your take on how you see that one working out.
Yeah, I mean, this is simple. I think people, like I said, have and are figuring out that the dollar, the days of King Dollar are behind us, and there is going to be a massive revaluation of gold. Gold is, let me put it simply, gold is coming into the system, not out of the system. And for years and years and years, uh, central banks did their absolute best to try to demonetize gold. It didn't work.
Yeah, failed experiment. And actually, the recent announcements, it got made very much out of favor. We were at peak financialization of everything at the dot-com boom, where
Right.
they managed to get gold. And I always highlight, everyone thinks subprime was your depression where everything turned. You have to go further back than that. They won with Volcker tightening the rates. You got a setup for a 40-year bond run that ended in 2020. But gold started moving already from its lows in 2000. And since then, everybody goes, quantitative easing. Well, now, if you're going to do that, I'm going to start inching towards that door. And of course, it captured Brown's bottom in the UK, where the name changed on the clipboard for all of Britain's gold being uploaded. Canada has zero gold. I mean, the policies they've pursued, it makes you wonder. But I suppose, where's the question in all that? It's a case of when did the cycle really, really start? How far back do we need to go? And how far does it go in lieu of the dollar and the future for America? What's your comments there?
Well, I guess you got to say the true beginning of the cycle was August 15th, 1971,
Yeah.
when the U.S. went off the gold standard. Um, Gold, as you mentioned, bottomed in 2000, 2001. From that point forward, I mean, from that point forward, gold has gone higher. But back in the 2000s and the 2000 teens, you would see spectacular smashes of gold and silver that were done with paper, done with naked futures contracts. That has not been happening. I mean, you can go back to, I believe it was October of 2022. If you look at a chart of gold, it became a tractor in first gear. And the reason being that was the month, and you can look on a chart, and it began one day exactly after the Russian reserves were confiscated. Well, first off, 107,000 is not a stupid number. If you take all the gold that the U.S. supposedly has, and you divide that into the debt and just the on books debt, you end up with 135,000. So 107,000 is not crazy.
Yeah.
I have a little bit of a different take. 1913, when the Fed started, I don't really believe that you saw. I mean, you did see inflation of assets. You saw that in the 1920s.
Yes.
Then you had the crash in 1929 and the depression. You know, the worst years were 1931, 1932, 33, when the banks were closing, and the government understood that they had to reflate the system. The only way to reflate the system was to revalue gold. And of course, what they did was they took the population's gold, marked it up, and that fixed the coffers of the U.S. Treasury. From that point forward, then we had World War II, which was very, very inflationary. The U.S. took on a ton of debt, and that was the cause, if you will, of Nixon going off the gold standard, because you had foreign nations, in particular France with de Gaulle, saying, here's $35, we want an ounce of gold. And they did that because they believed an ounce of gold was more valuable than $35, which, of course, they were correct.
Bill Holter underscored that the $50 mark is not just a resistance level but a stress point for the paper silver market, where the risk of a failure to deliver could erupt into a full-blown scramble. He tied this to a broader monetary distortion, reminding that inflation should be understood as money supply expansion, not merely rising consumer prices, a process that has inflated bubbles across assets and left the system dangerously over-leveraged. In his view, this monetary backdrop amplifies the likelihood that fear, rather than greed, will fuel the next phase of the precious metals bull market. Francis Hunt, meanwhile, placed emphasis on the structural setup in silver, pointing out that the long-standing cup and handle formation is now pressing into the $45 to $50 resistance zone. Unlike past attempts, he argued, today's breakout is supported by stronger physical demand and a shifting geopolitical order in which nations like India, China, and Russia are actively moving away from dollar dependency. This broader abandonment of the US dollar, combined with persistent deficits and economic hollowing, suggests that any technical breakout in silver will be underpinned by deep, systemic forces. Together, their views suggest that silver's next move through $50 could mark not just a market event, but a signal of profound monetary and geopolitical transition. Let's get back to the interview.
If you're trying to understand why gold is going parabolic, please read this thread. That was the bit I saved, and he mentions the Chapwood Index. And there's a couple of key points that he makes that are very interesting. It says, the middle classes will be financially destroyed. People aren't prepared. There's three major risks to this policy error of what's going on with this lie about inflation. He said, actually, if interest rates applied correctly on the true inflation rate, the Taylor rule would have short-term rates at 17.5%.
Right.
And then if we go on to just read what he says, which is quite an interesting, because I like seeing other people's opinion who are pretty smart and are putting down some numbers. He says there's three major risks. It's likely that all our foreign trading partners will abandon the dollar. That's already happening. You and I both think of it. Certainly as a store of value. It explains the soaring gold price. Yes, yes, yes. Secondly, if this continues for a long period of time, it can't stop. It has to continue. And until we've run the debt valuations right down and we have balanced trade books, not deficits, and we're producing stuff again that other people want to buy in the States, which is a long, long way of dollar devaluation, it's going to have to continue for a lot longer. I don't see how that can't be. So the middle classes will be financially destroyed. And he points out it's already been going since 2008 and 9 as well. So it's a good point. So the middle class will be financially just resulting in political violence. We've seen the sort of BLM type stuff, Antifa, whatever, all the usual paid factions, the collapse of a high trust society, and a huge increase in social ills, such as crimes of desperation. That's kind of hunger-driven stuff, homelessness stuff, addiction. You're going to have manic depressants. Prozac is the only thing that's going to do well in this environment. And it's quite a doomsday. The collapse of an honest monetary system has huge repercussions on the real incentives for hard work and thrift. Because one of the governments, and I've been of this view as well, which is why I love this post, because he was echoing and writing down what I've been saying. The governments can't use inflation anymore, Bill, to overspend. So they're going to come direct with direct taxation. And we call it tax scavenge mode is going to be invoked. So at the time you lead it least, you absolutely need these policies least. They're going to be coming at you hardest, which is why we're going to have this uptick in totalitarianism. So the whole social direction. Tell us your comment and take. Is Porter just being a doomer here, or does it get that dark?
Well, first, let's just go back to square one and talk about inflation. Look in a dictionary. Don't look in today's dictionary, but look in a dictionary that's 10 years old and look up inflation. And inflation is not CPI. It's not how much stuff goes up in value. It's how much money supply is created.
Correct.
And we look at them too, and this is off the top of my head, I'm going to say it's grown long term, in the 7 to 8% range. So you're going to have a 7 to 8% inflation rate, some years above it, some years below it, and primarily above that rate because you also have to take into account the amount of debt that's been put into the system because debt is buying power. Yes. I mean, without debt, you wouldn't have a real estate market at these levels. Without debt, or when I say debt, in this case, I should say without the use of leverage or margin, you would not have, 3%, 3.5% 10-year bonds. They're buying assets, they're buying stocks, they're buying bonds with the use of margin. Look at the margin debt now. With the use of derivatives, it's the financialization that's done this. It is a completely overblown bubble, and I think you have to go back. I mean, we're again at the point where Richard Russell said, "You've got to inflate or you die."
Let's bring it back, I suppose, to silver. Interestingly, on silver, again, we just show everybody for everyone else. I'm pretty sure, Bill, you will know this chart too well. But we had a key event, as I've mentioned, with the 47 and a half. We're trading. Let's just get the price correctly. Hold on 1 second. Get that screen share going. Share and minimize that. That's the traditionally referred to cup and handle that is now at a quarterly high, and that pink cross marks the spot, essentially where we are for the quarter in terms of quarterly in the key zone. There has been rejection in the $50, $45 range. We're yet to see anything coming in so far. That is a log scale chart, so it does look a little closer to 50 than it is on a bigger time frame. But that is a key move. The Indians, we've successfully, I want to talk about the Indians on two levels. They're turning into big buyers of silver now that gold is expensive. And their government is now doing what China once did. And more importantly, Trump's conduct towards India has driven them closer and tighter. They were a bit fence-sitting into the hands of the BRICS nations and going all in on this. It's the new system. Your comment on some of that socio-politics, both the silver aspect and the Indians themselves and where they're ending up.
Well, yeah, obviously India is going to do what's best for India. And if they're getting pushed on by the United States, pushed on by Trump, they're going to end up in the arms of someone that's friendly to them. And in this case, it's China. As far as silver is concerned, India has doubled their imports. And what has happened over the last, I think it was 9 months ago, or maybe not even 9 months ago, where Russia announced that they'd be buying silver and considered it a strategic reserve. And then that motion was seconded by the Trump administration in July or August, designating silver as a strategic reserve. So, India could probably just read the headlines and say, well, hey, wait a minute, we got Russia saying they're going to buy silver, we got the United States saying they're going to buy silver, maybe we should buy silver.
Yeah.
Now going back to your your cup and handle chart, it is without a doubt my opinion that over $50 we get a failure to deliver, because there will be complete blood in the water. And I guess the saying, there's no bull market like a gold bull market, and the reason being, it's not all greed. You have a lot of buyers that have fear. They're buying gold, they're buying silver, fearing that their fiat currency is going to collapse. They're going to be left with nothing. So I will just say this, that fear is a greater emotion than greed.
Yes, we learned that in trading.
Yeah. And one last comment going back to that cup and handle chart. I don't know if a failure to deliver pushes silver, blows it through $50, or whether a just a not a I don't want to say normal move, but a non-tumultuous move through 50. We get a close over 50, and then you get the sharks coming in and create the failure to deliver. But one way or the other, $50, I mean, it's obviously an important number. 1980, 2011, here we are again. And the only question in my mind is whether the failure to deliver creates above $50 silver, or does above $50 silver create the failure to deliver.
Silver's advance toward the critical $50 threshold represents more than a chart milestone. It reflects the mounting strain between physical demand and the paper-based system that underpins the market. With monetary inflation eroding trust in fiat currencies and global shifts driving nations to diversify away from the dollar, the stage is set for a move that could break past historical resistance. Whether the trigger comes from a failure to deliver or from a clean breakout above $50, the outcome points to a revaluation of silver and a broader signal of systemic change in the global financial order. If silver does breach the $50 threshold and triggers a failure to deliver in the paper markets, how might that reshape global confidence in fiat currencies and accelerate the transition towards sound money systems? So, stay tuned for clear, data-backed insights into the financial system. Be sure to like and subscribe so you never miss our weekly updates. Thanks for your support, and we hope you enjoy the video.